Hello, traders. Tis I, the Rumpled One, coming to you on Wednesday, February the 19th. The year's 2025. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, we just been in one heck of a trade, huh?
Yeah, it was one of those things where it just it was the reason for getting in a trade was good. You know, didn't make any mistakes, didn't do anything I shouldn't have done, and they just decided to go against me, and I was able to mitigate against it. But unfortunately, it was one of the well, not unfortunately, I guess unfortunately because I only made 3 points on the trade that I was in for probably 35, 40 minutes at least, if not longer. And I don't even remember how many. I told you how many trades I was in and out of just to,
You said
mitigate against how many.
14.
Yeah,
Didn't you say
14 of
14
them.
trades?
Yeah, but then I was not in 14 trades at once. It was in and out, pick up two, in and out, pick up two, in and out, pick up two. And just kept on doing that over and over and over again until it covered, what I was down from the original trade. You know, um, may have been smarter just to go and let me get out of this trade that I told you about before. Okay. Picked up a bunch of pips there, but it was type of thing where every it would go down, and I was in a long trade, and I was looking for to get to the 95 level, and every time I took a trade, it would just I took the trade, and the very next candle it dropped like 5 pips on me. So I just waited for my opportunity and averaged in, and you know, then got another opportunity, averaged in again, and so now I was in 3 trades, and then what I did was it then took a massive dump across about 5, 6 candles, and then I got another opportunity going. So that was my fourth trade in. But then what it did was it ran up and gave me 2 pips. It ran down, and then I went back in, gave me 2 pips, and it just kept on doing that over and over again. And by the time I never got back to my break even point, oh, not my break even point, but my original trade line price. But at that point, I was that thing. I was actually up overall. I think I was probably up 2, 3 pips, maybe even a little bit more. But I went and bounced out of the trade, and when I bounced out, of course, and did all the arithmetic. Now I only made point 0.3. But
Yeah.
it's like sometimes you just have that. But there are other days, like my first trade of the day, it was that thing where I went into the trade and it ran up like 5 pips for me, and then it came back down a little bit, and I was still up 3 pips. I got a flip flop box at that point. So I added in, and next thing you know, I'm getting out of that trade with 12 pips. So it goes both ways. It's just unfortunately, we tend to forget about the good things. We concentrate on the bad things. I think it's
Well,
part
it's
of
not that
human
we
nature.
concentrate. We just I guess they hurt more than the other ones feel good. So we remember
Maybe
those.
that's what it.
We remember that hurt, and I guess that's that prehistoric brain or something.
Exactly. So it's like I think that's you're exactly right with that.
So,
But
um, it's one of those things where, as I was mentioning the Walmart before we started the video, I said it's something we almost have to change our psychology because we get into trade with the expectation of a win. Otherwise, if and the thing is, part of that expectation is that we're never in a negative, or we're only in a negative just maybe for the spread. But as soon as we get in, we want price to move in our direction. But it's like we need to get out of that um I guess that frame of mind and replace it with, I'm going to get into this trade, and there's a chance that this trade's going to go against me for a while, and I might have to be in this trade for 4 or 5 minutes. before it turns positive. And one of the things I think you do it and I do at Walmal is we get in the trade and we do average in a lot of times. And even though, the traditional trading theory says you don't average in, but I think one of the things is if you don't go in your first trade, and you shoot all your shots, meaning let's say you have $1,000 account and you normally trade a mini lot. Well, maybe you only trade a micro lot or two micro lots. So that way, when you average in, you've got the staying power. Because, if you have a micro lot and it moves against you 10 pips, that's $1. If it moves against you 100 pips, that's $10. Well, on $1,000 account, that's only 1%. So sometimes it behooves you to have those small trades as opposed to having one trade that's it, because if it goes against you 10 pips or 20 pips, boom, you hit your risk limit or your stop loss and then you're done.
Right. Yeah. Yeah. I kind of agree with you. That's a good. That's what I do anyway. And I started doing that probably about a year and a half ago. And I can just tell you that it has improved my trading tremendously because it's the type of thing where you're never going to pick the perfect entry. I don't care who you are, unless you're the one that's actually put the price up on the board. You don't know which way price is going to go. You don't, and so you know it just doesn't work out. And to those people out there that say you never average in, okay. Well, here's my question for you: if the trade was good, okay, and you were willing to go and enter, let's say, at 25.90, okay, and then the price drops to 25.85, and you still think the trade is good, why wouldn't you go and buy in at a better price? That's my question. Why wouldn't you, if you still think the trade is good? If you still think, for instance, the price is going to go to 2,600, okay, and you were willing to buy it at 90, why wouldn't you be willing to buy it at 85? Now, here's one reason why you wouldn't be willing to buy it at 85. That is, you expended all your ammunition. Exactly what you're saying, because I think based on my account size, if I've gone and shot my entire load, I got nothing left. But if I'm smart about it and say, hey, I'm only going to go and, I'm not going to go and do a full load here. I'm only going to do a third or a quarter or a tenth of what I could do. And that way, if it goes against me, I'm not going to lose very much. And if it goes in my direction, I can always add in. I can always go and add in, to go and get to the full load. And if it goes against me at first, but the trade is still good, I can get a better price. It's sort of like, you're going down the road, okay, and you see gas, it's sitting at, at 247 a gallon, okay, and then you look ahead just past it, and you see that it's 237. Well, and you're willing to buy it at 247. Why wouldn't you go and be willing to buy it at 237? Especially if you think that's not going against you. And here in the situation for buying gas, you're going down the same road, the same direction that you want to go. That's what has always crossed my mind against those folks who say never average in. Now, I think part of it is that people say that is because there was, especially back in the early '90s, you know, people were doing martingale type trades where they had all these fancy ways of adding in, and you never can lose, and that type of thing. So, and the thing is, it wasn't based on what price was doing. It wasn't based on what the chart was saying to do. It was just based on, it was a purely numbers thing. That, I think, gets you into trouble. And
Right,
that I would agree with. That's not a good thing to do. But
right,
if I'm looking at the trade, it's gonna go. It hasn't gotten to the double O yet, but I almost guarantee that it's going to get to the double O at some point in time. Say why? Because it's such a big magnet to pull price in. Will it get exactly to the double O? I don't know. Maybe it gets to 25, 98.7, something like that, where you missed it by 1.3 pips. But it's still a magnet that's going to want to pull it in that direction.
Yep, I agree. And the funny thing is that there's so many different methods out there, entry methods or systems or strategies, whatever you want to call it. It's the how you trade part of it. But the thing is, um, when you're doing it, you really have to have realistic expectations. And, it's like all those guys. There's a new ad on YouTube, and I've seen it, or, it starts playing like about two or three times a day when I'm watching videos. And it's, hey, can I ask you a question? Oh, this is your car. This guy's driving, some supercar. And then the guy goes, yeah, what do you do? He goes, oh, I'm a day trader. you know? And goes, yeah. He goes, this your car? He said, yeah, I got two of them. You know, and that's what so many people are saying. Yeah, that's what I want to do. But it's just one of those things. Does he really own two of those? Who knows?
Maybe, maybe not. And the thing is, though, the reality is that if you got $1,000 account, you're not going to be driving that car. Okay, you're going to be driving the beat up Volkswagen. You
Or
that's
or
just and that
yeah, or one of my beat up Chevy Trackers, right?
exactly, and that's okay. And because that's what we all start there, or most of us start there. But you can get to the other side of it, but it's going to take time. And don't. I love what you just said. Don't have unrealistic expectations. Because when you have unrealistic expectations, that's when people get into trouble because then they start going and over leveraging themselves, and all of a sudden now you don't have $1,000 account, you got $1.97 account.
Yeah,
You know,
yeah, because I've got my chart up that has the blue stripes and the red stripes on the wicks, and just had a blue stripe signal here. And if you would have gotten in the trade right at the close of that candle, the next trade it would have pulled you down by a pip or two maybe. But then the next candle it shot up to 95, so you could have banked two or three pips real quick.
right?
On the other hand, if you would have taken that last candle as a flip flop box trade, you would have gotten in, and once again you could have banked maybe two or three pips, and it was real quick. But we can't expect that to happen every time.
Well, and it doesn't. I mean, that's just part of we're trading, and the problem. And it's not that it's a problem. It's just that I don't want to call it a problem or even a challenge or an issue. What's happening is that we're trading with thousands of people simultaneously, and so price is making moves based on what overall people think that the instrument is worth. What is the dollar worth against the pound? What is the pound worth against the dollar? And we've got this fight that's going on, and because of that, it's going to make moves. And what's going to happen is that sometimes it's going to make moves that just don't seem rational for you. It doesn't make sense, you know. Or what happens is, a lot of times you're sitting there with the price. The price, like I said, I really think the price is going to get to the double O. Well, the problem is there's some guy out there who works for a big corporation like IBM or Microsoft or somebody like that, and they have to go and convert dollars into pounds. Oh, what's that? What is that going to do? He's buying tons and tons of pounds and selling off dollars. Well, what is that going to do to the price? It's going to make
Exactly.
the
And
pound.
you know what, Walmal? The fastest
Go ahead.
15
All right.
minutes of trading is just about over. So, fellow traders, once again, keep in mind, about when you enter a trade, what do you really expect to happen within the next, 5 seconds, 10 seconds, 20 seconds, 30 seconds, next minute, 2 minutes, 3 minutes. If you just expect price to just keep going your way, that's not realistic. So always remember, never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.